Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. India's retail inflation cools to a 6.5-year low. Decrease in prices of cereals and pulses guide the food CPI lower. Economists expect July inflation to remain below 2% and below 3% for most of 2025. HCLTech's first quarter numbers disappoint as project ramp-up delays and additional investments in Gen AI hurts margins. The company downgrades its FY26 margin guidance by 100 basis points, but adds that pipeline remains strong. Market regulator SEBI says JaneStreet has completed with the directive to deposit over 4,800 crores in an escrow account. Adds that it is examining JaneStreet's request that the conditional restrictions imposed under SEBI's interim order last week be lifted. Income Tax Department issues revised search and seizure manual designed to address modern tax evasion risks, gives officers more powers to crack down on possible evasion through virtual digital assets.
In the last 5 years, we have not been doing well. We've had a management, I would say, crisis in the last 2-3 years, and our market shares are going down. And the younger generation is not interested in the management.
A day after VIP Industries promoter announces selling up to 32% in the company to a consortium by a PE fund, multiples, Chairman DilipPiramal says a management and ownership change was needed. Adds he will not be part of the new board but has been offered the position of Chairman Emeritus. A team from India's Commerce Ministry reaches Washington for another round of talks on the proposed mini-trade agreement starting Monday. Sources indicate the deal will likely move forward in phases, with a proper deal being targeted for sometime around September. EU trade ministers meet in Brussels for urgent talks after US President Trump threatens to impose 30% tariffs on the bloc. French President Macron calls for the EU to defend its interests resolutely, while Germany's Merz and Italy's Meloni call for calm. CNBC TV 18 Newsbreak confirmed after the preliminary probe on the Air India crash shows fuel vaults moving to cut-off position ahead of the crash. The DGCA asks airlines to complete the inspection of fuel control switch locking feature on 737 and 787 fleet by the 21st of July. Air India CEO Campbell Wilson says the preliminary report found no mechanical or maintenance issues with the aircraft or engines. Ola Electric stays in the red in the first quarter of FY26, but the EV maker's performance improves on a quarterly basis and helped stock surge 20%. Maharashtra Transport Commissioner tells CNBC TV 18 that they have received multiple complaints of 350 Ola stores operating without proper permissions or licenses. Yannick Sinner becomes the first Italian player to win a Wimbledon singles title. The 23-year-old beat French Open winner Carlos Alcaraz in 4 sets. He's now a 4-time Grand Slam champion. To the day's market action. Sensex and Nifty ended the day in the red, with broader markets outperforming the benchmarks. Nifty held on to levels above the 25,000 mark. IT stocks remained a drag for the Nifty, with the IT index being the biggest laggard today. The June consumer inflation number has come in at a 6.5-year low of 2.1% and lower than the CNBC TV 18 poll of 2.3%. Decrease in prices of cereals and pulses guided the food CPI lower. Letha Venkatesh is here with her editor's take.
June consumer price inflation number has come in at 2.1%, which is a 6.5-year low. The last we saw a number like that was in January of 2019. And it's low primarily because of food. Food, you can't even call it food inflation because it's deflation. It's come in at minus 1.06. And that's actually a little less than the CNBC TV 18 poll, which was flat. They were expecting 0.1%. So it's, even lower than that. Food CPI has fallen largely because of cereals and pulses, two weighty items in the food basket, which are lower even month on month. Which is unexpected. Normally by June, prices start spiking a bit because of the rains. Vegetable prices have risen about 7% in June over May, but in year-on-year terms, they are down by some 19%, which clearly indicates that food prices are still, even with monsoon dislocations, not really rising as usual. Core CPI, which is when you remove food and fuel, the balance, usually services inflation, that's up 4.4%, largely because of a low base of 3.1%. 4.4 is very much what the poll also threw up. Now, what this number does to policy is what we have to see. April, May, June average now works out to 2.7%. The Reserve Bank's forecast was 2.9%. So the market is now wondering whether this opens up space for a rate cut. July inflation is now we know, the first 14 days of July prices. The expectation is inflation will be sub 2%, 1.8%. And the expectation is that for a better part of this 2025 calendar, inflation is going to remain below 3%. For the full year FY26 average, the Reserve Bank's forecast stands at 3.7. The street believes that the Reserve Bank will have to pull it down to something like 3.3, 3.4. Now, these are ridiculously low numbers, way below the MPC's mandate of keeping inflation at 4%. So, the expectation is there scope for a rate cut? People will watch very closely what the Reserve Bank does in the next few days to liquidity as well. They may be a little more easier. But clearly, the August monetary policy suddenly becomes alive. Will they be more dovish? They may not be able to cut with having gone from accommodative to neutral just in the June policy. But who knows? The policy clearly becomes very, very important.
On to earnings now. HCLTech reported a weak set of numbers in the first quarter with net profit and margins missing street estimates. Reema Tendulkar joins us now with the details. Reema, take us through the numbers.
So the big miss this time in HCLTech is the margins. In the case of TCS, it was the muted top-line growth, but in the case of HCLTech is the margins. Margins in quarter one have declined by 160 basis points on a quarter-on-quarter basis at 16.3%, and the company has lowered the full-year margin guidance. Earlier, it was 18 to 19%. Now they're talking about 17 to 18%. The reason for the margin drop, the company says it's been impacted by lower utilization, additional generative AI, and go-to-market investments. On the top line, the full-year guidance has been narrowed. Earlier, it was 2 to 5%. Now it stands at 3 to 5%. The change is the lower end of the guidance has been increased by 100 basis points, but that comes on expected lines. Now on to Q1 and the big numbers. Dollar revenue growth for the company is up 1.4%, but on the back of the cross-currency movements, the constant currency revenue growth has declined by 0.8%. Now, this compares with a 1.1% estimate that the street had and a minus 3.3% drop that TCS, its peer, reported. Margins, as I said, is where the problem is. Margins for the company have fallen to 16.3% versus estimates of 17.3%, but compared to the prior quarter, it's a big decline of 160 basis points. Deal wins too have come in sub $2 billion, for the first time in nearly 4 quarters, and it's also the lowest deal wins in the last 8 quarters. So that is not a good sign. Other than that, headcount, the attrition numbers continue to remain muted. Attrition for the company is, marginally declined, but the bigger problem is the margin drop in Q1 and the subsequent margin guidance cut.
Our operating margin came in at 16.3%, which was lower than our plan. While Q1 has been historically the weakest quarter for us, the below-plan operating margin was driven by the fact that our utilization dropped due to a delay in ramp-up for a specific program. We also had a one-time impact from a client bankruptcy. In spite of all this, we remain committed to making and in some cases accelerating our investments in generative AI.
Shares of Ola Electric surged after its first quarter net losses halved sequentially. The company's margins also doubled compared to last month. The Bengaluru-based EV maker's deliveries rose by 32% month-on-month in June. Ola also announced that its auto business turned EBITDA positive in June 2025, citing strong gross margins driven by its vertical integration strategy. We told you first, and now it's official. BIP Industries promoters have agreed to sell up to 32% stake in the company. The buyers, who include Multiples PE and Mithun Sancheti, will also make a mandatory open offer for an additional 26% stake. Manglam Malu joins us now. Manglam, take us through the contours of the deal.
Well, it was the deal of the day for sure. Promoters of VIP Industries decided to sell up to 32% of their stake to Multiples Private Equity and a consortium of other investors as well. Initially, the stock opened lower because the deal price was 388 rupees per share. The stock had already seen a 75% rally from its 52-week low in the run-up to this deal. But more importantly, all the excesses were out of the system once the news was in. But thereafter, the belief that maybe the new owners could turn this company around, a stock which has been an underperformer in the sector, could actually do a lot better going forward. The street is betting on that, and thereafter we saw that recovery from the lows on the counter itself. We spoke to DilipPiramal, who joined us in our studios, and was fairly candid. He said that he had no option but to sell this business because there was a management crisis. More importantly, senior leadership wasn't performing, and at the same time none of his family members were willing to take up managerial positions and run the company on a day-to-day basis as well. So left with no option and loss in market share as the business was not doing well over the last few years. He had to go ahead and sell to private equity. The choice for private equity was rather simple. He said private equity investors are usually, betting on improving the value of the company and increasing the valuation as well going forward and the profitability, and that was his best bet. He will hold 20% stake in the company, will have to pare it down to almost 8% in the next 3 to 5 years, for which he has a right of first refusal with Multiples Private Equity as well. He says the company needs good management to get its old mojo back. Let's see how that performs. For now, the street is betting on the ability of Multiples and the legacy of brand VIP to take it forward from here on. Let's hear out what DilipPiramal had to say to us.
In the last 5 years, we have not been doing well. We've had a management, I would say, crisis in the last 2-3 years. And our market shares are going down. And the younger generation is not interested in the management. Of course, in India, there are some exceptions where even the 7th generation is doing well. So there was an absolute need, in my case, to have a change of ownership and management. So it is for the interest of the shareholders. I think we needed a change of management with change of ownership. You see, change of ownership, the party has skin in the game. And why then, private, as we are doing with the private equity player, is that the only aim of the private equity is to increase value. There is a clause that as 20%, I am still designated as a promoter of the company. So in a period of 5 years, not before 5 years, but after 5 years, I am required to bring down my stake to under 8%.
Renuka Ramnath, the founder and CEO of Multiples PE, had spoken to Shireen Bhan last week before the VIP deal was announced. She had told her that many Indian families are now realizing that their children are not interested in taking over their businesses. She said that a serious transition from family ownership to institutional ownership driven by PE consolidation was the next big opportunity.
I see the biggest opportunity in institutionalization of ownership. Indian families, now they are realizing that their children are not going to be interested to succeed. There are more exciting opportunities the subsequent generations want to pursue. And they all want to call out something as their own rather than taking the reins from their father or grandfather. And also consolidation to create mega corporations will be an absolute must to compete in the global marketplace and win, because you need to invest in technology, research, and brand and good talent. For both of these, private equity is a very, very important source of achieving this. Private equity firms will buy. We've seen enough transactions, but this will go tenfold in the next 3 to 5 years and probably 100-fold in the next 10 years. I'm waiting to see that moment where a serious transition from family ownership into institutional ownership driven by private equity consolidating the industry will happen. And this will also get supported by private credit. In fact, Multiples has also made its foray into private credit now. And alternate assets will take a very serious place in the portfolio allocation of both families and institutions going forward.
And Temasek's India head Ravi Lamba has said that the private equity firm aims to invest around $10 billion in India over the next 3 years. Speaking to Ritu Singh, Lamba added that the Indian market is the favourable environment for the company and accounts for 8% of the global portfolio.
Our exposure this year in March 25 in India on a mark-to-market basis is at $50 billion US, and it was $37 billion last year. So it's grown quite well. And what happened 2 years ago when we said, looking forward, we can see the potential to deploy $9 to $10 billion over the next 3 years. And, we've been well on track on that. We deployed just under $3 billion in the first year, and, we've deployed more than $3 billion last year. And this is not a number that we are so fixated on. It's a number which we are hoping to deploy. Going forward, we can deploy more than, the $9 to $10 billion that we talked about. Depends on the opportunities we find.
All right, let's move on. Market regulator SEBI has confirmed that JaneStreet has deposited more than 4,800 crore rupees in an escrow account, complying with its interim order of July 3rd. The company also requested SEBI to lift certain conditional restrictions which the regulator is currently examining. Earlier this month, SEBI had banned the American trading firm from accessing the Indian securities market for allegedly manipulating the market and unlawfully gaining over 4,800 crore rupees. The Finance Ministry has held interministerial talks on proposals to cut GST rates on various items. Sources have said that the government will also meet with states to discuss rate rationalisation and merging of GST slabs ahead of the GST Council meeting. The Finance Ministry will also seek inputs from the Commerce, Home and the Health Ministry on rate rationalisation. The Income Tax Department has issued revised search and seizure manual designed to address modern tax evasion risks. Sources say the manual gives officers more powers to crack down on possible evasion through virtual digital assets like cryptocurrencies and NFTs. Timsi Jepuria is here with more.
The Income Tax Department has rolled out a revised search and seizure manual that gives its officers expanded powers to tackle modern tax evasion, especially involving cryptocurrencies and NFTs. The new manual, aligned with amendments introduced by the Finance Act 2025, broadens the definition of books of account, documents, money, bullion, jewelry or other valuables to explicitly include virtual digital assets or VDAs. Officers are now authorized to search for and seize digital assets like crypto wallets, NFTs, private keys and recovery phrases. They can also recover data stored on USB drives, mobile devices, apps and cloud storage platforms. The manual empowers officers to trace cryptocurrency transactions using specialized blockchain analysis tools and access credit reports to identify mismatches between declared income and financial behavior. They can also summon Indian and foreign crypto exchanges to provide user and transaction data. If undisclosed or disproportionately large crypto assets holdings are found, further action can be taken. Importantly, officers can now access credit scores and loan histories from registered credit information companies to spot high financial activity despite modest declared incomes. The Income Tax Department has also formalized the use of lookout circulars to prevent serious tax defaulters from leaving the country. These LOCs can be processed if a taxpayer ignores summons or is deemed a flight risk, subject to approval by the senior officer and coordination with the Home Ministry and Bureau of Immigration. This move equips the tax authorities with legal tools and technology to disrupt tax evasion in the rapidly evolving digital asset space. Let's see how soon these measures come into action. Back to you.
A team from India's Commerce Ministry has reached Washington for another round of talks on the proposed mini-trade agreement. Abhimanyu Sharma joins us with more. Abhimanyu, what are your sources telling you?
India's negotiating team, led by the Deputy Chief Negotiator, has reached Washington, D.C. To proceed with talks for the first tranche of a bilateral trade agreement between both the countries. India's Chief Negotiator, Rajesh Agrawal, is expected to reach the U.S. by Wednesday, and this current round of talks is expected to go on till Thursday, that is for 4 days. It remains to be seen how early some degree of consensus is going to be reached between both the sides for the first tranche of a BTA. While both the sides are seeking several concessions, India has has been seeking concessions for exports of its labor-intensive products in areas like leather and textiles, whereas the US is seeking more market access for several of its products, which include agricultural, dairy products, as well as genetically modified crops. Also, till now, unilateral letters have already been sent by the US President Donald Trump to several countries as far as imposition of tariffs is concerned. So both the sides, of course, are currently negotiating the first tranche of a bilateral trade agreement, which they intend to finalize by the fall, that is by September or October of this year.
And coming up on India Business Hour, the DGCA asks airlines to complete inspection of fuel-controlled switch locking feature on 737 and 787 fleet by the 21st of July. That and much more in a bit. And you can also catch all CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. You're watching India Business Hour. External Affairs Minister S. Jaishankar met Chinese Vice President Han Zheng during the Shanghai Cooperation Organization meeting. The minister expressed his confidence that both the nations would maintain a positive trajectory of the improvement in bilateral relations. He also called for an open dialogue between the two countries amid a complex global situation. The Supreme Court has ruled that the secretly recorded telephonic conversation of a spouse is admissible evidence in a matrimonial dispute case. The apex court set aside the Punjab and Haryana High Court ruling, which said that the recorded conversation was a breach of privacy. Justice B.V. Nagaratna said, and I quote, if the marriage has reached a stage where spouses are actively snooping on each other, that is in itself a symptom of a broken relationship. The case first came up in a Bhatinda family court where a husband cited recorded phone conversations with his wife to prove that she was cruel to him. A CNBC TV 18 news break has been confirmed. Aviation regulator, the DGCA, has ordered all airlines flying Boeing 737 and 787 fleet to inspect the locking mechanism on the fuel control switches by the 21st of July. This comes after the preliminary investigation report on the Air India crash, which was released over the weekend, highlighted that the fuel control switches transitioned from run position to cut-off position within a second of each other, moments after takeoff. The DGCA order says several airlines, internationally and domestic, have started inspection of their fleet as per FAA's 2018 Special Airworthiness Information Bulletin. Sources say Air India has already completed inspection of 50% of its Boeing 787 aircraft earlier in the day. Air India CEO Campbell Wilson wrote to employees saying that the AAIB's preliminary report, or the Aircraft Investigation Bureau's preliminary report, had found no mechanical or maintenance issues with the aircraft or engines. He went on to say that all mandatory maintenance tasks had been completed, that there was no issue with the quality of fuel and no abnormality with the takeoff roll either. He also added that pilots had passed their mandatory pre-flight breath analyzer tests and there were no observations pertaining to their medical status. CNBC TV 18's Madhiya Mujawar joins us with more. Madhiya, take us through what this fuel control switch issue is all about. What is the DGCA now doing about it in terms of getting the checks done?
Well, the fuel control switches on the Boeing 787 are now at the heart of this investigation of the AI-171 crash. The AAIB's preliminary report reveals that the fuel supply to both engines was cut just seconds after takeoff. Why? Because both fuel switches were moved from run to cut off, essentially killing power to the engines. I obtained this video that you will watch on your screen from a 787 engineer showing how these switches behave. You can see they are built not to move on their own. You can see that these aren't your ordinary toggle switches. Each fuel switch on the 787 is protected by a spring-loaded V-shaped locking mechanism. Think of it like a mechanical guard sitting firmly between two positions. Run when the fuel flows to the engines, cut off when the fuel supply stops. To move them, you have to pull them out, as you can see in the video, then move them up or down depending on when you're using them. The V-lock has a job. It blocks the switch from sliding unless it is intentionally lifted. In other words, you can't just bump these switches with your hand, elbow, clipboard, or even turbulence and expect them to move. The lock was designed to prevent exactly these situations. But back in 2018, the US FAA flagged cases where these switch locks disengaged unexpectedly and recommended inspections of the locking mechanism and replacement if the locks disengaged, something that was not done by Air India. The AIB says that both switches moved within 1 second, but it is still unclear who moved them or why one pilot is heard asking the other, "Why did you cut off?" and the other replied, "He didn't." That line alone points to uncertainty in the cockpit, suggesting that even the crew was surprised by what had occurred. So could the switches have moved unintentionally despite the locking design is one question. Or is there a deeper mechanical or electrical issue where the switch state remained in run position physically, but internally the system interpreted it as cut off? Now, what we do know is this: moments after the cutoff, the switches were turned back on, restarting both the engines. So there's another possibility, given the pilot's exchange, is if it was deliberately moved to cut off by one pilot and he lied to the other pilot that he didn't do it, and then the switches were turned to run. That is one possibility. Another important factor was that the landing gears not retracting, as we watched in the video as well, and the AIB report also talks about it, that the landing gears were not retracted after takeoff. That has also raised questions if there was a bigger system failure that we are not aware of. Now, switches are the crucial part of this investigation for now. They are small, but the implications are massive, not just for one flight, but for an entire fleet of aircraft worldwide flying every day around the world at different airlines.
Global EV giant Tesla is all set to officially drive into India at 10:30 a.m. on Tuesday, the 15th of July. Tesla will formally launch its showroom in Maker Maxcity Mall in BKC, Mumbai. The EV major is likely to showcase 3 cars: the Model 3, the Model Y and the Model X. The company will also announce dates when bookings will begin and the delivery timelines. Sources tell CNBC TV 18 that Tesla will initially import cars from Shanghai but may start imports from Berlin once the India-EU FTA is signed. Entry-level prices of Tesla cars are likely to be between 50 lakhs to 60 lakh rupees. Prices could go up to 1.5 crore rupees for the Model X. Deliveries of Tesla cars are likely to begin in Q4 of 2025. The company is also likely to launch a low-cost model in India, which has been in the works for the last few years. The SpaceX Dragon spacecraft with Group Captain Shubhanshu Shukla and 3 other astronauts on board has undocked from the International Space Station. The crew spent 20 days in space. The spacecraft is scheduled to splash down off the coast of California at 3 p.m. tomorrow. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.